Welcome back to the Pro Ticker Podcast, your Tuesday morning edition covering major financial magazine headlines, everyone. Today, we're taking a deep dive into some really fascinating developments happening right now across global trade, technology, and the financial markets.
That's right. We're pulling insights from a whole stack of sources, CNBC Daily Open, Bloomberg, Yahoo Finance, and others, trying to unpack what these big decisions really mean.
Exactly. Our mission today is to get behind the headlines, understand the shifts in the economic landscape, and figure out what it means for you.
And what's really striking, I think, is how interconnected all these stories are. You see these patterns emerging in policy, market psychology, even, the ongoing tech rivalry between the U.S. and China.
Yeah, it's not just random news items. We want to look beyond the immediate noise and understand the sort of underlying dynamics at play.
Precisely. Where should we start? The U.S.-China trade situation seems like the big one this week.
Okay, yeah, let's unpack that. So the major development, as reported by CNBC, is President Trump extending the pause on those really heavy U.S. tariffs on Chinese goods. We're talking the full 145% tariff.
Right, another 90 days. An executive order signed really just hours before the previous pause was set to expire.
And this delay, it was pretty much the expected outcome, wasn't it? Following those talks in Stockholm back in late July between U.S. and Chinese negotiators.
It was, and you'd think this would bring a huge sigh of relief. I mean, for investors, frankly, for much of the world, given we're talking about the two largest economies.
A full-blown trade war doubling import prices.
No.
Yeah, that could seriously hurt, maybe even cripple the global economy. No question.
But here's the interesting part, connecting this to the bigger picture. Despite that expected relief, markets were, largely unmoved. They even retreated a bit on Monday.
Which raises the big question, why? Why is such a muted reaction?
Well, the sources, particularly CNBC, suggest investors might have become sort of conditioned to expect, let's call it flip-flopping from President Trump.
So the threats, the promises, the criticisms, the praises, they just don't carry the same weight anymore.
That seems to be the analysis. It highlights this fascinating psychological element in market behavior, almost a desensitization.
It really makes you think about market predictability itself, doesn't it? If policy consistency isn't really expected, how does that change long-term investment strategy?
That's a profound point. It suggests that the market is now pricing in the unreliability of policy, perhaps more than the policy itself. The actual signing of the order becomes less of a surprise, less impactful.
So, okay, what does this tell us about the bigger picture of Trump's trade strategy? CNN analysis calls it a major China gamble, taking this really aggressive stance.
And surprisingly, you have to say it seems to have paid off, at least so far. The stock market's near record highs. The U.S. economy has rebounded.
Inflation hasn't surged the way many predicted. And according to those same sources, the U.S. Treasury has been collecting tens of billions in tariff revenue each month.
True. But that said, China still holds some significant, trump cards, as CNN puts it.
Right. They're still the world's biggest exporter of goods.
And crucially, they control nearly 90% of the global processing for critical rare earth minerals. Stuff essential for electronics, defense equipment, you name it.
And Bloomberg and CNBC are reporting that Beijing's been slow-rolling the release of these minerals, right?
Yeah.
Despite U.S. demands for, preferential treatment.
Exactly. That control over rare earths gives China immense leverage, doesn't it? It's like controlling the spigot for everything from iPhones to fighter jets.
So what are we seeing globally? Are countries scrambling to find alternatives?
They are. There's a definite global push to diversify supply chains, invest in domestic processing, but that takes years, decades even. It really highlights a major vulnerability for a lot of economies.
Plus, President Xi Jinping has kept President Trump waiting for that one-on-one meeting, which Trump apparently really wants.
It's all part of the negotiation. China's demands, according to CNBC, are pretty clear. Full tariff removal, easing tech curbs, lifting sanctions.
Whereas Trump's focus is more on narrowing the trade deficit, pushing China to buy more U.S. goods, like soybeans. It's a very complex game. Both sides are playing the long game here.
Definitely. And we shouldn't forget the impact closer to home. While the Treasury collected those billions, Yahoo Finance points out the burden on small U.S. firms.
Yeah, potentially a $202 billion annual hit from these tariffs. They're struggling with red tape, bureaucracy, complex rules, and higher customs bonds.
Those bonds are essentially financial guarantees to make sure beauties get paid. It's another cost, another administrative headache for smaller players.
And sort of related, there's also that new 25% tariff on imports from India, specifically linked to their consumption of Russian oil. It shows how wide these policies reach.
Absolutely. It's not just a U.S.-China thing. It affects global energy markets, small businesses. Everything's connected.
Okay, now let's shift to where this gets really interesting, I think, the tech front. Specifically AI chips. This is unprecedented stuff.
It really is. We're seeing reports from CNBC and Yahoo Finance about this agreement where NVIDIA and AMD will pay the U.S. government a 15% cut of their China revenue.
In exchange for export licenses for certain AI chips, NVIDIA's H20, AMD's MI308. And the White House has confirmed this arrangement exists.
From a market angle, CNBC's Jim Cramer weighed in. He argued, interestingly, that there's nothing novel about this 15% cut.
He sees it as just another form of tariff, basically, money going straight to the Treasury.
Essentially, yes. He acknowledged that there's a pay-to-play element, which he called debatable, but suggested it's one of the more benign government interventions in business.
So, good for the taxpayer, good for NVIDIA and AMD. That was his take.
That was his take. It's also interesting. CNBC reported Trump initially wanted 20%, but NVIDIA's CEO Jensen Huang apparently negotiated down to 15%.
This whole setup, even if framed as benign, it does raise questions about the government sort of dictating terms for strategic tech trade, doesn't it? Is that a sustainable model?
That's the core debate, isn't it?
Right.
On one side, the U.S. gets some value, allows some trade. On the other, it adds complexity, cost, potentially distorts the market.
And China hasn't just accepted this passively. Bloomberg reports their authorities are actively pushing local companies away from using NVIDIA's H20 chips.
Especially for government and national security work, they're even sending out notices asking companies, why are you buying NVIDIA H20? Have you found security issues?
NVIDIA denies any vulnerabilities, naturally. States the H20 isn't for military or government use.
Right. So Beijing's strategy here seems twofold, according to Bloomberg. One is this worry, denied by NVIDIA, about potential location tracking or remote shutdown features.
And the other.
The other is a really strong push to accelerate their domestic chip capabilities. Get Chinese companies to buy local.
Meanwhile, U.S. officials, including President Trump, are reportedly exploring if location tracking could actually be used to stop smuggling of restricted components. It's a complex web.
It is. And contextually, that H20 chip, it's less powerful than NVIDIA's absolute top-tier stuff, but it has strong memory bandwidth, which is good for AI inference.
Handling those big AI calculations, even if not the fastest chip overall.
Exactly. Though Trump has publicly called the H20 obsolete, arguing China already has comparable chips from Huawei.
So the U.S. strategy, according to analysts cited by CNBC, is basically to, quote, addict China to substandard or non-cutting-edge technology.
That's the phrase they use. Pretty provocative. It aims to keep the U.S. ahead short term, but you have to wonder, could it backfire?
How so? By pushing China even harder towards complete tech independence, creating a more divided global tech world.
That's the risk. It's a high-stakes gamble. You try to slow them down, but you might just end up giving them more motivation, a clearer target to surpass their own domestic innovation.
It's a real paradox. And looking ahead, Trump has even signaled he might be open to letting NVIDIA sell a downgraded version of its most advanced system, Blackwell, to China.
Right, suggesting like a 30% to 50% off in performance. Blackwell is NVIDIA's next big thing, a major leap in AI power.
He plans to meet with Jensen Huang about it. Analysts are calling that a potential big deal if it happens.
It would reinforce that strategy, keep China reliant on slightly less advanced U.S. tech. But again, China's Huawei is developing its Ascend series chips. A more competitive version is expected next year, says CNBC.
So China's definitely not planning to stay in the substandard category permanently. The race continues.
Absolutely. Okay, maybe we should pivot now to the broader market currents and something crucial, data reliability.
Good idea. So U.S. stocks ended Monday lower. Traders were waiting for today's July CPI report, the Consumer Price Index.
The expectation, based on Reuters polls mentioned by CNBC, was that prices increase as Trump's tariffs kicked in. Core CPI anticipated up 3.1% year over year.
But this leads to that bigger, maybe more worrying question about the reliability of the economic data itself.
Yes. CNBC reports Wall Street has been voicing concerns about government data validity, especially from the Bureau of Labor Statistics, the BLS.
These worries got louder after President Trump fired the previous BLS commissioner and nominated E.J. Antoni, right?
Correct. Some economists are questioning if the agency might become politicized, Plus, there are concerns about budget cuts forcing changes in how data is collected.
Leading to lower survey response rates, bigger revisions later on.
Exactly. Now, most on Wall Street apparently don't believe there's, nefarious intent. But the methods described as primitive, like phone calls, written surveys, and the increasing reliance on imputed data.
That's estimating prices when you don't have the exact info.
Right. All of this is making analysts cautious. If the numbers we base policy and investments on are under scrutiny, what does that mean for trust in economic reporting?
It's a huge concern. It creates this fog of uncertainty, makes it harder for businesses to plan, investors get hesitant, public confidence can drop. It kind of undermines the whole idea of data-driven policy.
It really does. Feels like reading tea leaves sometimes, you know? Every number tells a story, but maybe a different story depending on who's reading it.
Yeah.
Yeah.
Despite these domestic worries, though, we saw some interesting global market moves. U.S. stocks were down, but Japan's Nikkei 225, Australia's S&P SX 200 actually hit record highs Tuesday.
Boosted by that tariff relief news and tech rallies, according to Bloomberg and Yahoo Finance, and Citibank actually raised its S&P 500 forecast.
Citing strong earnings and expected benefits from Trump's One Big Beautiful bill.
So, mixed signals globally. And speaking of big moves and tech dominance, let's touch on a few other headlines that caught our eye. That SoftBank Stargate project sounds massive.
Right. Bloomberg reported SoftBank shares surged on AI hopes. Plans for a $500 billion Stargate data center project involving OpenAI and Oracle has $1 trillion.
What does that tell us about the AI infrastructure race, beyond just the chips themselves?
It tells us the race is about building the capacity to use the chips at scale. That kind of money suggests compute power is seen as the new currency, data centers the new oil fields.
A massive bet by SoftBank, linking with OpenAI and Oracle, aiming to own a huge piece of the global AI ecosystem. Huge implications for how AI gets delivered worldwide.
And staying in tech, another battle is brewing. Elon Musk versus Apple.
Yeah, Bloomberg reporting Musk is threatening legal action, accusing Apple of antitrust violations by favoring OpenAI in the App Store.
Does this signal more scrutiny coming for big tech's power, especially around AI integration on their platforms?
I think absolutely. It's a classic platform power play. How much control do giants like Apple have over which new technologies like AI succeed? We'll likely see more clashes like this.
And just quickly rounding up a few others, President Trump changed his tune on Intel CEO Lip-Bu praising him after calling for his resignation. Intel stock jumped, though some analysts, like Brian Suzzi mentioned on Yahoo Finance, still see fundamental struggles there.
Also good news for gold bugs. Yahoo Finance confirmed Trump clarified gold imports won't face tariffs, clearing up some market confusion.
And geopolitically, Spain seems to be taking a risky path, standing up to Trump on defense in China, but CNBC notes seemingly without major consequences yet.
All these little pieces, CEO comments, commodity clarifications, diplomatic stances, they all add layers to this really complex global picture we're trying to understand.
So wrapping this all up, what does it mean for you, our listener?
Yeah.
We've covered a huge amount today. The U.S.-China trade dance, the high-stakes AI chip policies, market reactions, those questions about data reliability.
It's incredibly dynamic. Policy, sentiment, technology, all deeply tangled together.
Which leads us to the final thought, the question for you to consider. Given how markets seem to be getting conditioned to these policy shifts, these reversals, and this ongoing redefinition of global trade and tech.
Right. How might investors, how might businesses need to fundamentally rethink their long-term strategies, looking beyond just the day-to-day headlines?
What are the deeper forces at play? And what does this combination of events really suggest about the future of global economic stability? Something to mull over.
Definitely food for thought.
All right, that's our deep dive for today. Thanks for joining us on the ProTicker podcast.
We hope this helps you navigate the complexities.
We'll see you all tomorrow morning with new headlines from major financial magazines.